All right, everyone, welcome back to the podcast. Mr. GAI here from RealStepsNFT.com and host of the Financial Literacy Workshop. If you're looking for a topic this week, how about we just try to unpack what in the actual Fintech is happening in our economy right now? Because things are looking eventful, to put it mildly, as we head into mid-May 2025. So, I'm looking at the economy, and honestly, it's enough to give anyone a headache. You hear navigating market volatility and tariff impacts. That's the polite version. What I'm seeing is the traditional markets just having a fit. The S&P 500, the Dow, the NASDAQ, they all took a pretty serious tumble earlier this month. And the reasons? Well, it seems like some of that AI mania is cooling off. Plus, we've got this massive cloud of uncertainty hanging over everything thanks to President Trump's tariffs. I'm hearing companies can barely even put together a financial forecast these days. It's like they're trying to steer a ship in a storm with the lights out. And don't think this is just a little blip on the radar. The forecasts I'm seeing suggest U.S. growth could slow to something like 0.6% for 2025. Meanwhile, good old inflation? That could be spiking up to around 4%. And a big part of that is these tariffs and the sheer unpredictability of it all. The Fed's making noises about maybe, just maybe, cutting rates come July, but who knows what kind of new craziness we'll be dealing with by then. We're getting hit with these shocks from all sides. Tariffs, wobbly policy decisions, global supply chains that are still a mess, and financial markets tightening up. Now, how does the average person feel about all this? Well, if you look at the consumer sentiment and inflation numbers, it's pretty stark. Yeah, core CPI apparently hit a 4-year low back in March, but hold on. That was before these latest tariff announcements really started to bite. Now, consumer sentiment has just plummeted. It's at its second lowest level since 1952. People are genuinely worried. They're worried about prices, about their jobs, about whether they can even plan for next month, let alone retirement. This isn't just some abstract economic data. This is hitting families right here, right now. So when the traditional financial ship starts looking like it's got a few leaks, where do people naturally start looking? They start looking for life rafts, or maybe even entirely new kinds of boats. And that, folks, leads us straight into the world of blockchain and crypto. Suddenly, that magic internet money isn't looking so fringe anymore, not even to some of the really big players. I'm seeing a booming crypto M and a landscape out there. We're talking serious capital, major acquisitions. Did you see that Stripe? Yeah, the fintech giant dropped $1 billion to buy Bridge Ventures, a stablecoin infrastructure company? $1 billion! That's not pocket change, people. That's a massive signal. Both in the US and Europe, crypto deal-making is on the rise. It's not just a niche tech play anymore. It's the financial services and tech sectors waking up and realizing they need to get involved in what many clearly see as the next wave, or at least a powerful alternative. And why is it getting all this exposure? Why are people and institutions pouring money into it? Well, it's pretty straightforward. When the old systems are creaking under the strain of inflation and volatility, the promise of something new, something decentralized, something that might operate outside the direct control of the traditional gatekeepers, that starts to look incredibly appealing. And what's actually powering this? Just look at the latest in DeFi, stablecoins, and crypto products we're seeing right now in May 2025. You've got stablecoin issuers like the folks behind PYUSD teaming up with major exchanges for things like no-fee purchases, and they're pushing into new DeFi applications. I've seen news about new metal payment cards designed to let you use your crypto for everyday spending. Imagine that! Crypto as a service. I'm seeing this pop up, where traditional banks and fintechs can actually embed crypto trading into their own platforms. Big global derivatives exchanges are gearing up to launch XRP futures, and there are new Bitcoin yield funds emerging, aimed right at institutional investors who want to get BTC exposure with potential yield. This isn't just about speculation anymore. This is about building out an entirely new financial infrastructure. DeFi protocols, Even with the occasional scare like that $5.8 million exploit on Loopscale, though they did recover some of it, are really pushing what's possible with lending, borrowing, and earning yield without needing to go through the old-school banks. Stablecoins are there trying to provide that, well, stable bridge into this new world. The investment hypothesis I'm seeing is that the current system has some serious pain points, and this new wave is offering potential solutions, potentially faster transactions, lower fees, maybe even more transparency, and for a lot of folks, a hedge against what they see as the failings of traditional finance. Now, how is all this cutting-edge innovation actually being developed and put into our hands? That's where Fintech and the incredible rise of AI come into the picture. This is where the innovation really hits the ground. AI in Fintech right now in May 2025 is just exploding. I was looking at some of the things coming out of Finovate Spring. It's wild. We're talking AI agents helping small businesses secure loans, like with Casca. AI is being used for voice authentication when you call into a contact center. Illuma's doing that. It's powering financial planning tools. Penny Finance is one. And even helping you figure out the value of assets for estate planning, like Covet. AI is promising to make financial services faster, smarter, and way more personalized. It's getting so advanced that even the UK's Financial Conduct Authority is taking a hard look at the risks involved when AI is making core financial decisions for banks and insurers. And it's not just AI in a vacuum. We're seeing all these emerging fintech innovations happening alongside a rapidly evolving regulatory landscape. New platforms are popping up for everything you can imagine, from managing complex estates to embedded lending for businesses, often with AI doing the heavy lifting. The UK government itself has tagged fintech as a priority for growth. So what I'm seeing is this perfect storm brewing. You've got a traditional economy that's making people really nervous and uncertain. This uncertainty is creating a huge opening, and into that opening are flooding blockchain technology, cryptocurrencies, DeFi, and this whole army of AI-powered fintech solutions. Of course, the regulators are scrambling to keep up, trying to figure out how to put some sensible guardrails around this high-speed train without completely derailing all the innovation. I see the FCA is even setting up permanent bases in the US and Asia Pacific just to try and get a better handle on it all. So, for all of you listening, especially those of you trying to plan your future with realstepsnft.com, the big picture this week is this. The old financial world is under some serious stress. It's showing its age and its vulnerabilities. This is forcing a change, and that change is being driven by crypto, by blockchain, and by incredibly smart fintech powered by AI. It's a messy, volatile, and sometimes pretty wild time to be talking about money and your financial future. But it's also a moment of incredible opportunity. This is where the next generation of financial literacy becomes so crucial. It's not just about balancing your budget anymore. It's about understanding these huge tectonic shifts that are happening right now. Shifts that could fundamentally redefine how we think about our money, our investments, and what financial freedom really means in the 21st century. There's a lot to watch, a lot to learn. Stay tuned, stay informed, and let's navigate these waters together.